Jamie Dimon, CEO of JP Morgan Chase, has recently said that they are absolutely scared of the rapid growth of new financial technology over the past years, and he is absolutely right. New forms of payments are growing rapidly, and this is killing one of the biggest industries in the world, banking. As more and more new ways of payment that do not involve a bank are coming up each year, people are becoming less reliant on banks, and this is cutting into banks' revenue and is marking the start of a new era. Many companies are playing a big part in this major change. PayPal and Google Pay, for example, are two digital wallets that are affecting the industry, but no company is playing a bigger role in this than, of course, Apple. The biggest tech company in the world is changing this industry forever in a way that no one expected. And if things keep moving forward like this, banks should be really worried. Let me explain. Back in 2014, Apple's Tim Cook announced a new form of payment that will be introduced into Apple's devices, and Apple named it Apple Pay. Shortly after that, Apple Pay was indeed added to the iPhone, and at first, it was an option that people were reluctant to use, and many people thought that it was not going to be a big deal. Apple Pay was not even the first digital wallet to be introduced by a big company, so it was not even a new invention. But like everything Apple does, it had a big advantage when compared to any other wallet, which is the iPhone. iPhones have been part of our lives for over a decade now, and they are by far the thing that we use the most every day and the easiest and most readily accessible thing in our pockets. At this point in 2014, the iPhone was already a massively successful device, so Apple knew that it was the right time to make the iPhone a wallet replacement. Paying through cash or even a card issued by a bank was getting old and outdated. And Apple knew that users would jump at the chance of using their favorite device to pay. After all, the iPhone replaced so many devices that we used to carry on a daily basis, so it was time for users to say bye to their wallets too, or at least, to paying through a difficult process. Apple Pay would make paying for things online or even in real life as easy as can be, and users appreciated that with time. In fact, as of 2023, Apple Pay is activated in 78% of iPhones in the US, which is stunning. Now, you might ask yourself, why do all this? Why would Apple spend all this time and effort to develop a new payment system when a few already exist? As always, the answer would be money. A lot of money, to be precise. $782 million last year. Apple Pay is the only digital wallet that banks agreed to pay a fee per transaction. So, every time you pay using Apple Pay, the bank is giving Apple some money back. When Apple introduced Apple Pay, they gave banks the opportunity to be part of it, and banks agreed. They did not think much of it. When you link a bank's card to Apple Pay and it is used for any payment, banks would get a small amount of that transaction back from the shop you bought the item from. This is what normally would happen. When that transaction is made using Apple Pay, the bank would be forced to send a cut of that back to Apple. Of course. We are talking about very small percentages of a transaction. When you buy a small item, a bank makes less than $1, for example, of that sale, and they would send a small part of that back to Apple. You might think that this would not add up to much, but it does. Across millions and millions of Apple Pay transactions per year, these very small returns to Apple add up to millions. Last year, Apple made $782 million, and it is expected that Apple is going to make even more this year. At first, banks had to accept this, and they did not think much of it. They thought that Apple Pay would never amount to much, and if it brings any extra business, it would do them well. They were not happy with the fact that they now acted as lenders of money only and that transactions were now being made under the Apple Pay name instead of the bank, but they did not have any other options. They were afraid that if they refused to work with Apple, Apple would eventually replace them, so they had to agree. However, their efforts went to waste as Apple decided to replace them anyways. Between 2014 and 2019, banks would act as the providers of the money needed for the transactions, but then, in 2019, Apple announced the second step of their process of ending the dominance of banks. With this step, banks would no longer even be needed to provide money, since Apple now will be the provider of money. In 2019, Apple announced the Apple Card, and with it, Apple also announced its Buy Now, Pay Later program. With this program, you can now simply pay for anything using money that Apple provides you, and you can then repay Apple later when you are ready. With this step, they eliminated the middleman, which was the bank, and now, Apple can make more money from each transaction. And more importantly, millions of transactions are made per year which the bank no longer takes part in and makes no money from. Banks are trying to fight back. Many of them are changing their old technology for new ones like tap-to-pay cards and such. But Apple is so far ahead and has a massive lead, and it is going to be really hard for banks to make a comeback, but they sure will fight. Speaking of money. Want to turn your online shopping into a money-saving adventure? Introducing Honey. Honey is a free browser extension that can save you some serious cash. Imagine getting the best deal every time you shop online without lifting a finger. Honey does the work for you, automatically finding and applying the best coupons at checkout. And the best part? It's totally free. So why wait? Start saving and earning with Honey today. Add the Honey extension found below in the description, and let your shopping pay you back.